Tesla's electric vehicle sales decline in Q4 and 2025. Global EV crown passes to BYD. Tesla Incorporated, the U.S. electric vehicle giant long synonymous with the rapid rise of battery-powered cars, reported a significant drop in vehicle deliveries in the final quarter of 2025, highlighting growing challenges in the global EV market and erosion of its leading position. Tesla delivered 418,227 vehicles in the fourth quarter, a year-over-year decline of roughly 15 to 16% from the same period in 2024 and below many analyst expectations. End of tax incentives and delivery slowdown. The sharp decline in late-year deliveries comes after the expiration of the U.S. federal electric vehicle tax credit of up to $7,500, which had lured many buyers earlier in the year. The sudden removal of that incentive contributed to a dramatic surge in sales in the third quarter, when consumers raced to take advantage of the rebate, followed by a pullback in demand in the fourth quarter. For the full year of 2025, Tesla delivered approximately 1.64 million vehicles worldwide, down from about 1.79 million in 2024. This marks the second consecutive annual decline in deliveries for the company, reflecting both softer consumer demand and intensifying competition in the EV sector. Shift in the global EV market. BYD takes the lead. One of the most notable outcomes of 2025 sales figures is that Chinese automaker BYD overtook Tesla as the world's largest seller of electric vehicles. BYD delivered around 2.26 million EVs last year, up about 28% from 2024, compared with Tesla's roughly 1.64 million. That shift reflects broader changes in the EV industry, where lower-priced models, strong domestic demand in China, and rapid expansion into export markets helped BYD grow its footprint globally. Meanwhile, Tesla's product lineup, including the Model 3 and Model Y, which have dominated sales in previous years, showed signs of stagnation without significant updates, and newer models like the Cybertruck saw much smaller deployment numbers. Regional challenges and competitive pressures. Tesla also faced tougher market conditions overseas. In Europe and parts of Asia, intense competition from established automakers and Chinese brands eroded Tesla's share of EV registrations. Some markets where Tesla once led have reported steep declines in deliveries, while rivals have invested heavily to win market share. At the same time, the overall EV market in the United States contracted in late 2025 after the tax incentive phase-out, with EV sales accounting for a smaller share of total vehicle sales compared with earlier growth phases. Stock market reaction and future focus. Tesla's share price reacted with early gains on the news of its delivery figures, but those were tempered as investors weighed the implications of the lower year-end performance. The company's stock has seen volatility, including extended streaks of declines following record highs in late 2025. Despite the sales slowdown, many investors and analysts emphasize Tesla's broader ambitions beyond traditional EV sales. CEO Elon Musk has increasingly positioned the company as a leader in autonomous driving technology, robot access, and humanoid robotics, areas that could define Tesla's growth in coming years even as its core vehicle business faces mounting competition. What comes next? Industry outlook for 2026. The fourth quarter results underscore a pivotal moment for Tesla and the wider EV industry. With federal incentives gone and consumer demand cooling in key markets, automakers are recalibrating strategies toward affordability, diversified powertrain options, and new technologies. Analysts believe that as prices continue to fall and charging infrastructure expands, EV adoption could regain momentum later in the decade. Tesla's next major financial results, including detailed earnings figures, are scheduled for release later in January 2026, when the company will provide further insights into revenue, profitability, and vehicle delivery trends heading into the new year.